Hi there, my name is Zola and welcome to my channel. In this video, I'm going to show you step by step how to open your very own tax-free savings account in less than 5 minutes. Stay tuned because you are watching the Financial Metaverse. So, what is a tax-free savings account? A tax-free savings accounts were introduced in South Africa in 1st March 2015 as a means to incentivize South Africans to save. It does this by removing all taxes that are usually payable on the growth of your investment in any asset class. For instance, if you invest in shares, ordinarily you'll pay dividend withholding tax. If you invest in interest-bearing instruments such as cash or bonds, you would have to pay tax on the interest end subject to certain exemptions. And if you invest in instruments that gain their growth via a capital gain, for example, the difference between the amount you originally invested and the growth that was earned on that investment, that is called a capital gain, which is taxable subject to certain exemptions as well. The tax-free savings account removes all of those taxes that are ordinarily payable so that you enjoy the full benefit of the growth on your money. What are some of the disadvantages or the drawbacks of a tax-free savings account? Well, there are very few. One that I could mention is that you are limited in terms of the amount that you can actually invest into a tax-free savings account. So if your investment objective is fairly large in terms of what you want to achieve, let's say you have a goal to accumulate 2.5 million rand within 10 years. A tax-free savings account would probably not be able to enable you to achieve that goal fully. You'd have to look at other instruments as well, because you are limited to contributing only 36,000 Rand a year currently, which equates to 3,000 Rand a month. I'm sure in future that the South African Treasury will look at increasing that amount, but for now you are limited to 36,000 Rand a year or 3,000 Rand per month. Now, it is advisable that you invest in a tax-free savings account with one financial institution, because if you exceed that 36,000 per year, SARS will penalize you with a 40% tax on the additional amount beyond the 36,000. So it may be difficult to track the different tax-free savings accounts if they are not with one institution. Ordinarily, institutions now track the amount that you have invested and actually will warn or prevent you from investing beyond the 36,000 Rand threshold. And this contribution excludes the amount that you withdraw. So if you invest 36,000 Rand today and then a month later you withdraw the 36,000, you can't again invest 36,000 because you would have breached the limit. And the other feature, which may be a drawback to some, is that it is fully flexible and liquid. In other words, you can withdraw your funds without any penalties or restrictions whatsoever. This may be a drawback to some who may not be disciplined, because a tax-free savings account is ideal for those who have a long-term investment horizon. But what I generally see as a financial planning professional is that many people take a tax-free savings account almost like an emergency fund kind of scenario, thinking that they're going to gain a benefit from the tax-free incentive. However, as I will show you in a practical example shortly, the tax-free incentive really begins to kick in a significant way once you reach 10 or more years of investing. So who is likely to really benefit from a tax-free savings account? It is those, as I've mentioned, who have a long-term investment horizon or who have an investment objective that will be achieved in 10 or more years. This could be saving for a child's tertiary or high school education, saving to boost your retirement savings, or any other investment objective that could be achieved in 10 years or longer. So who can invest in a tax-free savings account? Well, any person, including minor children, can invest in a tax-free savings account. And an individual can have more than one tax-free savings account. And as I explained earlier, it is much better to have your tax-free savings account with one financial institution for ease of being able to track the amounts that you are putting in so that you don't breach the 36,000 Rand per year limit. So just to recap, a tax-free savings account can be opened by any individual, including minor children. Therefore, you can't open a tax-free savings account in the name of a trust or a company. You are limited to contributing 36,000 Rand per year or 3,000 Rand per month currently. It has a lifetime contribution limit of 500,000. Your investment is fully liquid. In other words, you can access your fund at any given time. There is no minimum or maximum investment time horizon. And of course, the best benefit is that you don't pay any tax on the growth of your investment. However, the most important thing you must be aware of is that if you breach this 36,000 Rand contribution limit, you will be taxed at 40% on the amount beyond the 36,000. Now that we know what we need to know about a tax-free savings account, Let's open one right now. So for this example, we're going to use Sanlam as the financial services provider. Sanlam is the biggest non-banking life insurance company in South Africa and in fact in the whole of Africa. You will find this link in the description below. So a couple of things to note here is that if you require the aid of a financial planner, maybe to address some of your other financial planning needs, you can get in contact with Nandi Gusha by setting up a meeting, just typing your full name, your email address, your phone number, and the date that you'd like to meet her at. You can just select May the 3rd, and then you can just type in exactly what you'd like like her to assist with. Okay, and then I can submit that and she will get a notification of your request and contact you accordingly. Or you can simply just WhatsApp her, much easier on a smart device. So if you're doing this on a smartphone, it will immediately connect you to your WhatsApp, and then you can just send her a WhatsApp message, or you can simply just call her or send her an email and she will respond accordingly. But let's open our tax-free savings account. So what we will do is go to investment, tax-free investments, and then it will give us some more information on what a tax-free saving is, or tax-free savings account is. As you can read there, you can invest from as little as 400 Rand a month. So you can opt to do this by yourself or with the aid of a financial advisor, who will then be able to be in contact with you to help you fulfill your other financial planning goals and not just this particular goal. So let's say I'm going to choose to go with the aid of an advisor, which is Nandi, and then start the application. And so over here, I'm going to select a recurring monthly payment. I'm going to start with 1,500 Rand a month, and I'm going to keep the term for 15 years because I have a long-term investment time horizon. In terms of the annual increase, I'm going to go with 10% per year, and it tells me automatically here how much I can expect as an illustration to accumulate with this scenario over here. So about 866,000, which includes a tax saving of 115,000 Rand, which is quite significant. To keep things simple, I will just go with the default option, which is the Satrix Dynamic Balance Fund, and it will explain here what the fund offers. If you'd like a more detailed explanation of the technicalities around funds, tracker funds, collective investment schemes or unit trust funds and so on, I'll be glad to make that. Just let me know in the comment section below. But for the purposes of this video, we're just going with the default option, the Satrix Dynamic Balance Fund, which is extremely cost effective as well. Now I can opt to invest now. So here I will of course enter my personal details, my names, my contact details, email, click next, and of course I will have to insert my ID number, my country of residence, monthly income, my residential address, postal address, and I can go next. Alright, so now I have to insert the payment details. I will have to choose the bank, can be any bank, the account number, the account type, and when you'd like this to start. Let's just say I would want it to start, let's say on the 25th of May. I want this to start. Source of funds, my salary. We've now got all the payments set up, and I can go next. Will you be replacing an existing product? No, I'm not replacing anything. And this is the declaration. You can read that. Once you've done that, then you can declare that the information is accurate. You can declare that because you are doing this, it by yourself. Then you select your employment status. These things are optional. You can just select them if you want. And then okay, so I've just purchased myself a tax-free savings investment plan. I'm going to be sent an email. This will be my plan number and so on. So just like that, in less than 5 minutes, you can set up your very own tax-free savings account. I hope you found value in this video. If you have any questions or comments, please leave them in the comment section below. Please consider liking this video, sharing it with those whom you think will benefit from this video, and most importantly, subscribing and hit that notification bell. And I suggest you watch these videos.
I can feel the pain on my back, yeah. Keep on taking pills every day, yeah. Trying to numb the pain on my back, yeah. Still trying to change on my face.